June 16, 2020, Tuesday morning in Europe. So good morning for you guys, good afternoon, good evening, whatever you are. Piotr here, this is Light Forex Global YouTube channel. Fireworks are going on. Let's start with the latest news from UK. Average weekly earnings weaker than what market was expecting. Ex bonuses weaker than what market was expecting. Unemployment rate 3 months 3.9, expectations 4.7, previous 3.9, so no change. German CPI month to month minus 0.1 versus expectations minus 0.1. Government Swiss government sees GDP contracting 6.2 in 2020, worst since 75. More informations. Bank of Japan. No change when it comes to the interest rates, right? No change, but expands special COVID-19 program, right? And it looks like from the 75 trillion yen to 110 trillion yen. Well, plenty of zeros, right, at the end. Also, we have Beijing shoot some part of the city for 8 and 14 days for quarantine. Plenty of new cases in China. And the last news is President Trump waits 1 trillion for infrastructure to spur the economy. But guys, forget about everything. I told you right now, the most important thing here is the Fed. What they did? Let's check what they did, guys. Let's check what they did. Hi guys, forget Bank of Japan. Forget Chinese outbreak, forget Swiss National Bank rate decision this week, forget Bank of England. Remember when I said that I haven't seen scary Powell like what we have last time, right? So it looks like they recognize that they screw. So now Fed will begin buying broad portfolio of US corporate bonds. So Fed is buying everything right now, and we've seen another disconnection between the stocks market and the real world. But looks like for some it works better than, you know, heroin or all this stuff. They simply have to print and pump money like never before. And at the same time, they're saying that everything is fine. Everything is fine. So how can we translate that one? Well, when they're saying everything is alright, we know, no, not everything is alright. The question is how broke the world is right now. Number one. Number two, the translation, nothing is work as it's supposed to work. So, yeah, that's what we have. But doesn't matter, we are much higher on the risk, and there is a chance we are going to continue today. But don't forget, Powell 3 times this week. At every time he is going to have a chance to scare the market again, right? Be careful. Well, we know that it's not that great, but we have to follow the charts, right? Anyway, that's how I see the things. Watch US yields and remember about the Powell, guys. Let's check few charts. Let's have a look what we have on the charts. Okay, before we will jump and check them few charts, The most important could be within the next few days US yields. It's worth to watch, in my opinion, the charts. We've seen 2 weeks ago huge rally, meaning the bond sell-off. Last week, right, we've seen a pullback, but for me is a retest of this consolidation, right, a little bit of the lower shadow, and for now we trying to rise. I'm not gonna be surprised if we are going to retest 1%. So let's check what we have when it comes to the few majors. Okay, euro dollar. I would be very careful for now. If you remember, we were discussing euro dollar very detailed explanation. The top post FOMC top around 1422, 1430, and the bottom yearly open, red dotted line, weekly open as well. So we have a range, right? And I would wait for retest of the top of that range or retest of the bottom of that range. As long as it's not broken to the upside or to the downside, I would try to fade both sides, right? Once we are going to get the close above or below, that might be the case for the new direction. Of course, with what Fed is doing, the dollar should be aggressively sold off, but it's not. Why? Because other fundamentals hasn't changed. Have not changed. What I'm talking about, for example, the world is world needs the dollar, right? Fed can print for the US, but other central banks, they cannot print the dollar, right, for themselves. So that's how it looks. So I think for now the range here could stay in place as we are talking about it. Now, with the Bank of Japan action and the Fed action, looks like dollar yen got the problem to get back above 107.50, and we are talking about this possible supply here, right? This supply is tested third day in a row. The thing is that we haven't seen a huge rejection yet, right? But of course it's hard to press buy button when everyone is selling here, right? So what could be the solution? Well, probably we might see some kind of the retest of this double bottom Thursday Friday low, right, in relation to this possible demand we've seen to the left. That could be around 106.50 as a buying opportunity, right? Or eventually if we are going to break through that supply, retest of that supply could be then as a buying opportunity. The sellers, no change sellers are here. Then in case of the break, I think that sellers are close to 108.40 we discussed, and then closer to the previous week open, and this supply zone visible, so closer towards 109.40, 109.60 in that case when it comes to the dollar yen. The next one is a cable post data. Cable overall pound is reacting lately as a risk on risk off currency. So because of what happened yesterday, we've seen strong reversal, right? Pound stays above weekly open, and during the Tokyo session we've seen the retest of the previous week open, right? Plenty of supply here, and that's gonna be very interesting where we are going to see the daily close because of this double top, because of this possible over under, right? So we should from the seller's perspective, we should start to build upper shadow to get the daily close below 26.50. In case of the higher close, probably we are going to retest levels close to post FOMC high, like the Thursday high, for example. All right. So also here for now, I would be very careful and cautious. Why? Because there is a chance that pound yen might rise higher, right? Pound yen is fighting with the similar supply visible on the dollar yen, but is moving faster, right? It's like the Ferrari or good car, fast car, compared to the big truck when it comes to the dollar yen. Whenever they want to try to push higher, it's very tough. Here, in relation to the risk on, probably during the European hours, don't forget, guys, that we have at 4 p.m. CET we have the Powell, and till then probably we are going to see some upside action, and I'm going to look for a retest of these levels if they are going to hold. Right, we are talking about the current levels. That might be if we are going to create some lower shadow before the London Open. It could be the case for higher levels, right? We will see. Move and close below 135.40. Got the chance to be negative, and depends what we are going to see towards the end of the day. And the last one is Nasdaq. All right, we've seen Europe opening around 2.5% higher. Some indices even more higher. So what about the Nasdaq? Huge rally during the cash market, huge rally during the post market with the Tokyo session, or during the Tokyo session, and the bulls are going to look to hold this 9,800, 9,820 level, and that's gonna be very interesting. Where are the sellers? Well, I think the sellers are closer to 10,000 psychological level. There is a little bit of the possible swing high end of the business around 9,970, but overall I would watch the zone, this white zone here around 10k when it comes to the Nasdaq, when it comes to the sellers. So buyers again 9,800, 9,820, and somewhere around this swing low we are talking about the 9,750, 9,730. With that being said, guys, be careful out there. We have higher volatility. It's not the bull market, it's not the bear market. I've seen that on the Twitter. So kudos to someone who was able to put that name. It's a kangaroo market, up and down, up and down. Higher volatility, meaning that it might be smart to think about the a little bit lower exposure. That's it from me, guys. Have a great European session and see you around. Take care and goodbye.